Now, the JSE is contending with mixed Asian markets today as investors are concerned about a second outbreak of COVID-19 in the United States. Now, locally, investors are watching the mining as well as the manufacturing numbers from Stats SA. To give us a sense of how the markets are looking today, we're joined now by Roy Mutooni, an analyst at ABSA Asset Management. A very good afternoon to you, Roy. Lovely chatting to you again. Now, the local index has been taking some strain this week. How are the markets performing today, specifically after the U.S. Federal Reserve painted a rather bleak picture of economic recovery yesterday?
So the equity markets are flattish relative to yesterday. What we're seeing is a bit of a down on the side of the domestic industrials, but the mining and the gold stocks are moving up, but in small percentages. I think it's simply a recalibration after hearing what the Fed chairman had to say yesterday, and also just people taking profits from the 8% rally that we've seen since the beginning of the month. I think the U.S. statement gives South African investors a little bit of pause as to how quickly the global economy can come back to normal and exports and earnings and all of those things start to normalize.
Now, the local focus is currently on the mining data, which, according to Stats SA, decreased by 47% in April. Won't you take us through some of the contributing factors there?
So I think the more interesting way to look at it, rather than year-on-year, because on a year-on-year basis, it was always going to be worse, but on a month-on-month basis. So if you look, mining production declined 3% in February compared to January. It declined 18% in March compared to February, and 34% in April compared to March. So if you look at it on a month-to-month basis, you can see it's worsening, and it's basically reflecting the impact of the lockdown. The stricter the lockdowns got, the less you had in terms of mining production. Remember, it's only coal that continued at 100%. So as we see lockdowns beginning to be relieved, to be eased, we should see a recovery in mining production. The relevance here is that if mining production is low, then exports are low, then that gives pressure to the trade balance. But as mining production begins to increase and miners come back to work, we should see some exports beginning to grow and dollar earnings beginning to improve.
And let's look at the manufacturing data for the month of March. What is the outlook there?
Well, I think the manufacturing data only comes out at about 1:30, but I would expect it to show pretty much the same trend, probably even worse, because if you consider most of manufacturing was shut down, apart from effectively essential services, was shut down towards the end of March. The more relevant data point would be what happened in April, and also what happened post the downgrade to level 3 levels of lockdown, because that's when people started firing up their factories and workers were able to come back.
Now, the U.S. consumer prices fell for a third straight month in May, and this is the longest stretch of declines on record. Now, are these numbers perhaps a reflection of the globally stretched consumer?
I think what that number tells you is the true impact of this COVID disaster pandemic. Effectively, what COVID did was it created a public health issue and affected both supply and demand. So even as the economy starts opening up in the U.S., people's jobs haven't started. People haven't started earning again, and it also costs money to start up production. So what you have is a loss of supply and a loss of demand. That's why prices are relatively constant. So you have excess production capacity in the economy and too little demand to utilize that. So I think this is something that you're going to see, particularly when people are worried about second waves of infection. People lock down themselves voluntarily because they're afraid of going out, because they hear this is starting up again. It will take some time to normalize. And I think that's what the Fed chairman was saying, that you may need subsequent stimulus programs to come in September and in October.
And let's focus a bit on the oil prices for a moment. What is the latest on those prices? And I'm asking this really on the back of the U.S. stockpiles hitting an all-time high.
So there's two hands to that argument. I think on the positive side, in the last weekend we saw OPEC agreeing to keep their quotas that they agreed a month ago for another few months. So that is positive for the oil price. Now, the problem with the U.S. is that you're seeing inventories accumulating, which is negative for the oil price. It basically is telling you that demand is not growing as fast as people expected, which goes back to my previous point there, that even as lockdowns begin to be released, people aren't driving that much. Remember, aviation is a significant component of oil consumption, and that hasn't really started up anywhere, let alone in the U.S. So I think it's just an indication that maybe the markets have gotten ahead of themselves in pricing in a return to normalcy, and that the real economy is struggling to start up again.
And we'll leave it at that for this afternoon. Roy, thank you once again for your insight there. That's analyst Roy Mutooni.